He was also attacking the other crypto exchanges like Binance. He was also going head-to-head with the SEC. Those are three powerful sets of enemies, you know, while you're going 180 miles an hour.
Hey guys, welcome back to Library of Wealth. Today we have the latest interview with Michael Saylor, giving us his take on Sam Bankman-Fried, as well as new information on the inside dealings that went on behind the scenes. Following Sam Bankman-Fried's arrest on Monday, as well as Kevin O'Leary's testimony the following day, there's been a significant shift in market sentiment, as questions still loom over the timing of Sam Bankman's arrest and why he ended up not testifying the next day. Let's get right into the latest interview with Michael Saylor as he talks about the new details of Sam Bankman-Fried's former empire and how he maneuvered his assets and defrauded thousands of users and investors. If you enjoy the content we do here, don't forget to hit the like button and subscribe to the channel. Let's get right into the video.
And you generally think he didn't think he would ever get caught?
He's delusional. Novogratz said he's delusional. Like a week after he blew the entire thing up, he was thinking he could just make a phone call and raise $10 billion in order to save it. He's going to process this for the next 2, 3, 4 years, and you know, many years from now, he may look back, if he's honest with himself, and figure out what he did. I think he's just deluding himself. You know, it's
really
like these stories we tell ourselves that if we tell them, we tell these, like for example, if you listen to Sam's language, he doesn't say, okay, I stole $10 billion from my customers and I used FTX like my personal piggy bank and I gave it to Alameda and then Alameda gave $4 billion of it to me and then I spent it on stuff. He doesn't say that. He says, I didn't realize that Alameda had a margin position. It was a little bit bigger than I thought it was, and we had a little bit of messy account. I didn't realize I marked it up $6 billion and took the money. It's like, our accounting was messy and our margin position was a bit larger than I understood. He doesn't say, I counterfeited $14 billion worth of air tokens. He doesn't say that. He says, well, we had $14 billion in assets, but we just didn't have the liquidity at the time we needed the liquidity. If we'd had more liquidity, then we could have met these particular demands and it would have all been fine. So living in this world of liquidity and margin is a way for you to say, you don't have to say, my customers put $10 billion in my bank and I took it and lost it and spent it. He just says, my customers had margin positions, I had margin positions. It was all, everybody, ours was a little bit bigger. It's like I run a casino, everybody comes in the casino and you roll the dice and if you lose your chips. But my son is able to bet infinite money and if he loses, he can double down with infinite money and he can keep, and he never has to pay it off. And so there's one player in the casino that never loses, only wins, and can always double down.
Always fun.
And so the result is Sam set up a casino. Everybody else was subject to being liquidated, and they could withdraw any amount of money, and they could bet, and they would never be liquidated. So what that means is, over time, Alameda ended up with a $10 billion debit. There was 10 million credited to the rest of the players. When Alameda went to a $15 billion debit, right, the entire thing collapses. And he still hasn't kind of come to grips with the fact that that's unethical. First of all, he bought everybody. And let me just make a stark observation. He counterfeited $10 billion in 1 year. If you could counterfeit, if you created 10, look, you have a 300 million FTT tokens, move the price $30. Do the math, right? $30 on a token when you give yourself 300 million of them is 10 billion. And that's just one token. So if you fall off the turnip truck and you find that you can generate $10 billion in a year, what do? You go buy everybody. You buy every influencer, you buy every politician, you buy every celebrity, you buy the stadium, you buy all of Albany, you buy the government, you buy everything that's for sale, right? It's hard to find a crypto influencer that didn't take FTX money, but he hired everybody. Go as fast as you can. Well, how much can you spend? $1 billion in a year? $2 billion a year? They thought they had found the fountain of money, right? There is nothing more lucrative than a license to print money. This is why the Bitcoin maximalists just get so angry, right? They declare war on the coiners and coinery. The idea that you can just create your own token, sell it to the general public and manipulate the price of it and dump it on. But here's where The poor Bitcoiners never figured out. Their view is they're creating a coin and dumping it on retail. But again, Sam's twist on it was, no, I'm not going to dump it on retail. I'm driving it to the sky. I'm never going to sell it. I'm going to use it to buy other banks. And then I'm going to drain the assets out of the bank by giving myself an under-the-table loan. It's so much more diabolical than just dumping a coin on unsuspecting retail traders.
Saylor goes on to say that the level of trust that has been shattered for cryptocurrency is unknown, but he believes that there are many more to follow in succession of FTX's collapse. Sam Bankman-Fried used funds at multiple companies to defraud investors and engage in a pay-to-play for not only personal financial gain, but to reinvest in other crypto assets whose value was also fraudulent.
It's like if I borrowed $20 billion and I agreed to pay you 20% interest, I have to come up with $4 billion a year in real cash to roll that forward. And if I'm printing my own equity token to pay the $4 billion, eventually that equity token crashes because it gets diluted in the market and the entire thing just goes to zero. So going fast on a Ponzi scheme caused it to blow up. Bernie Madoff went slow, and that's why he was able to roll. And he didn't wave a red flag at the bull, right? I mean, Sam was going hard. He was basically attacking the entire Bitcoin community. If you're actually extracting real cash, you're burning the candle at both ends. And so it was destined to blow up because they were just too aggressive. You know, the bubble popped on this cycle when the Fed started raising interest rates. To your point, Jerome Powell is the most powerful person because he sets the price of money for $500 trillion worth of assets. So that's a pretty powerful job. When they took the short-term rates, you know, from 6 basis points up to 470 basis points on the 1 year in 12 months. And so when the Fed started tightening, that put pressure. The first thing to break was the most fragile thing, which was a poorly engineered, unstable coin called Terra Luna. That brought down Three Arrows. Three Arrows crashed and brought down Celsius and Voyager and BlockFi, and it wasn't obvious. And the reason it's not obvious, again, is to make this point, is publicly traded companies have a fiduciary obligation to disclose transparently within 4 business days or less on an 8K. Like if my CFO said, guess what, we just did something stupid and we lost $1 billion, I don't sit on that for a year. I don't sit on that for a quarter. Like some number of hours at 9:30 a.m. on Monday when the market starts trading, people are trading my stock. And if I have material information that a rational investor would think is material to their buying or selling the stock, I have an ethical and a legal obligation to disclose it. And it's pretty obvious why. I mean, if you were on the other side of the trade,
I would want to know.
At least $8 billion in customer funds are missing, reportedly used to backstop billions in losses at Alameda Research, the hedge fund SBF also founded. Both of his companies are now bankrupt with billions of dollars worth of debt on the books. Bankman-Fried admitted he had a bad month, but denied committing fraud at his crypto exchange. Bankman-Fried could face a host of potential charges, civil and criminal, as well as private lawsuits from millions of FTX creditors. What do you think about Michael Saylor's latest interview on the crash of FTX, and how Bitcoin and the crypto market will be affected? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.